And welcome back. Home prices in California have now decreased by 18% from last year's highs. The median sold price here in California has now decreased for 6 consecutive months. I also have some additional insights regarding our housing market here in California, regarding pending home sales, price reductions, and much more. This is based on a new report from the California Association of Realtors that was just posted on March 16th. Today, at the time of this video. Hope you guys appreciate these timely housing market updates. And of course, if you do, please hit the like button and also consider subscribing if you haven't done so already. So with that said, of course, I have a lot to share. So according to the report here, again, posted on March 16th in the morning hours, the lowest rates in 5 months helped boost California home sales to reach above the 250,000 unit annualized pace for the first time in 4 months. So for the annualized pace for home sales in California, that was actually at 284,000. That actually is the first time in 4 months that we got to above a 250,000 level here. In regards to rates going down, the lowest rates in 5 months, average rates in January, which impacts home sales in February and here in California, average rates in January were hovering around 6 to 6.2% for the vast majority of the month. Now rates are hovering around 6.5 to 7% at the time of this video, which again is mid-March. So closed home sales of existing single-family houses here in California totaled a seasonally adjusted annualized rate of 284,010 in February. This figure, by the way, would represent the total number of houses that would sell over the next 12 months, given the current sales pace for February. So February's sales pace was up by 17.6% compared to the previous month, which of course was January, but still down 33.2% compared to 1 year ago. And here's a snapshot what's happening right now at the statewide level here in California. So again, 284,000, the seasonally adjusted annualized rate for home sales, and that's a decrease of 33% compared to February of 2022. Here's where it gets spicy though. Look at this. The median sold price is now down by 4.8% on a year-over-year basis at 735,480, a decrease of almost 5% compared to 1 year ago. I have a lot more to share regarding home price trends, especially compared to pre-COVID levels and also compared to 2008. So stay tuned for that here in just a little bit. The unsold inventory index is at 3.2 months, a giant increase of 60%. Days in the market, look at this. 28 days is the median days in the market. That's a time frame when a home seller lists their home for sale to when they accept an offer. And it becomes a closed home sale approximately 30 days after offer acceptance. But days in the market is at 28 days. That's an increase of 211% compared to 12 months ago. So let's talk a little bit more about home sales here in California for February and how that compares to years past. Again, a giant decrease of 33% on a year-over-year basis, but an increase of almost 18% compared to January. As you can see right here, an increase compared to last month, but historically speaking, we're at very low levels, especially compared to pre-COVID levels back in 2019 and 2018, when annualized sales pace back then was actually over 300,000. Again, this increase of 17.6% on a month-to-month basis is probably due to the fact that rates decreased from 7.4% in late October down to about 6 to 6.2% in January. Now here's something I found to be interesting as well, because here are home sales by price range compared to 12 months ago. The biggest decrease was actually for houses that sold for over $2 million, a decrease of 49% compared to February of 2022. But every single price segment here has decreased by more than 20%. Now here's something that's very important that we should definitely be paying attention to, because pending home sales are still down by about 34.9% on a year-over-year basis. A decrease of almost 35% in contracts being signed between buyers and sellers compared to 1 year ago. When talking about closed home sales, this is a lagging indicator what our housing market was like approximately a month ago, back when rates were at 6 to 6.2%. But right now, at least for the month of February, rates decreased to 6% in early February and ended the month at around 7%. So this is probably why we're seeing this huge decrease of contracts being signed between buyers and sellers, down by 35%. And stay tuned for February and also March's report here, which of course will be published in about a month or two. This also caught my eye as well. Here is a look at pending home sales on a month-to-month basis by price range. Pending home sales in February compared to January this year. Look at this right here, because for home sales or pending home sales of more than $2 million, this has basically been going straight up ever since January this year. The biggest increase on a month-to-month basis is for pending home sales of more than $2 million, whereas virtually all other price segments except for less than $300,000 are going down compared to 1 month ago. And here's another way to look at that, because here is pending home sales compared to January for each of these price segments here. Again, for $2 million plus, a giant increase of 63.6% compared to January this year, whereas every other price segment here is recording increases, but not even close to this giant increase of 64% for houses over $2 million. Also, as the California Association of Realtors posted right here, pending sales move up in all price ranges due primarily to seasonality. It's entirely normal to see an increase of contracts being signed in January and February, especially in the spring home buying season, because of our seasonality of our housing market each year. Okay, let's talk about home prices in California. I hope you guys are still watching this video, because I have so much to share regarding my own analysis of home prices here in California. First, I want to share this slide with you guys, and then I'll go over my own analysis of their data here. So it says here, California's median home sold price softens, growth declines for the 4th consecutive month. Again, the median sold price here in California for February is just over $735,000. That's a decrease of 2.1% compared to January and a 4.8% decrease compared to 12 months ago. And this is where it really gets nerdy. So here's the data I pulled from the California Association of Realtors website here regarding home sold prices in the state. And this, again, by the way, or the data I share in today's video is based on existing single-family detached houses. So single-family houses in today's video, excluding brand new construction. So these two columns is what I pulled from their website here, but here's what I added right here. Year-over-year changes as well as month-to-month changes as well, and also share how the trends we're seeing right now compares to years past, especially compared to pre-COVID levels. And also, just for fun, I'm gonna be sharing price trends in 2008. So let's have a look at this. Again, the median sold price is $735,000, a decrease of 4.8% on a year-over-year basis, and decrease of 2.1% compared to January. So look at this, because at $735,000, this is actually a 2-year low for home prices. Going back to February of 2021, back then it was $699,000. So the price levels right now, or I should say the median sold price right now, is at a 2-year low here in California. On top of that, as a note right here, prices in California have now decreased in 8 out of the last 9 months statewide. On top of that, they have now decreased for 6 consecutive months as well. Now looking at November, back then prices decreased by 0.6%. And excluding May of 2020, which is obviously the onset of COVID, or just after the onset of COVID, that was the first year-over-year decrease in home sold prices here in California going back to February of 2012. In other words, the first time that prices decreased on a year-over-year basis in 129 months, or nearly 11 years. But now look at this, because home sold prices have now decreased on a year-over-year basis for 4 consecutive months. In other words, excluding the onset of COVID back in May of 2020, the last 4 months are the only months that prices are down on a year-over-year basis going back to February of 2012. And here's February 2012. The last time we saw prices decrease compared to 12 months ago. Back then, it was a decrease of 0.9% compared to February of 2011. Something else worth mentioning as well is that home sold prices, again, are down by 4.8% compared to February of 2022. The last time that prices decreased that much was back in December of 2011. Back then, it was a 5.2% decrease compared to December of 2010. But wait, there's more, because I actually want to share how the changes in home prices compared to last year's peak compares to years past, especially compared to pre-COVID levels. So when looking at the peak, which was in May of 2022, all-time record highs for home prices here in California, which is a staggering $900,000. When you compare that to right now, or I should say compare this to February, that's a decrease of 18%. So home sold prices have decreased by 18% from May of 2022 compared to February this year. And that equates to a giant decrease of $165,000, going from $900,000 to approximately $735,000. And this 18% decrease, by the way, compared to last year's highs, is much worse than the national average. On a national level, home prices are down by about 10% compared to last year's peak, where in California, we're down by 18%. So have a look at this. Here is the change in home sold prices during that same time frame. May of 2019 compared to February of 2020. May through February. So during that time frame, prices decreased by 5.1%, whereas this year they decreased by 18%. Back in 2018, I should say May of 2018 through February of 2019, prices decreased by 11.1% compared to the 18% we're seeing this year. So in other words, taking a step back here, the decrease in home prices from last year's highs last year is much worse than pre-COVID levels back in 2018 as well as 2019. And just for fun, have a look at 2008. So this is May of 2008 through February of 2009. During that time frame, prices decreased a whopping 36.6% compared to 18% this year. And here's a look at 2008. Back in May of 2008, the median sold price here in California was $386,000. In February of 2009, it was $245,000. So by my dumb math, or by my nerdy Excel spreadsheet, that's a decrease of 36.6%. Look at these decreases though in 2008 though, which is absolutely crazy. More or less starting in October 2007, that's really when the wheels fell off. And then we saw giant decreases in 2008, as you can see right here. Prices decreasing on a year-over-year basis in the range of 25% approximately to around 40% compared to 12 months ago. Additionally, when looking at the median sold price here in California, when you compare this to February of 2021, so prices compared to 2 years ago, we're only up by 5%. And to give you guys some context as well, back in 2022, prices only increased by 1%. All right, let's get back to the California Association of Realtors report here. The sale price to final list price ratio for February was 97.7%. This means on average that houses sold for 2.3% below the seller's final list price for February. And even though this is an increase of 1.2% compared to January, it's still down by 4.9% compared to 12 months ago. Also for the month of February, only 27.6% of houses that sold above the seller's final asking price. In contrast, this means that approximately 72% sold at or below the seller's asking price. So in other words, the vast majority of the houses that sold below the seller's asking price, which is night and day difference compared to 12 months ago. 12 months ago, the ratio there was 71.2%. 71% selling for over the seller's asking price. Now it's only 27%. Let's also talk about active listings, which of course is housing inventory or the number of houses actually for sale as of February here. So here's active listings by month. So it says here active listings decrease for the 5th consecutive month, as you can see right here. So for February, we still have far more houses for sale compared to last year as well as compared to 2021. But when looking at levels right now compared to pre-COVID levels back in February 2020, just kind of eyeballing this, there's approximately 35,000 houses for sale. Now there's approximately 20,000. Also back in February of 2019, there was approximately 45,000 houses for sale. Now again, there's only about 20,000. So big picture right here, even though we have far more houses for sale compared to the past couple of years, historically speaking, we're at very low levels. What's also interesting as well is that active listings grew from last year at the slowest pace since May of 2022. So here's the year-over-year changes of active listings here in California. In February, it only increased by 38.2% compared to February of 2022, well below the levels we saw back in the winter months last year, gains over 60%. And the reason for that, or one main reason for that, is this right here. The number of new listings decreased by 24.6% on a year-over-year basis here. A decrease of 25% fewer new listings that hit the market compared to 12 months ago. So look at this. New listings for February, there's approximately 12,500. Compare this to last year, February 2022, there was 16,500. Back in 2021, 17,290. Also, look at pre-COVID levels. Back in 2020, February 2020, as well as February of 2021, there was approximately 21,000 new listings that hit the market both of those months. So even though housing supply in California has increased by 38.2%, we're not seeing this giant increase of housing supply on a historical level because of this right here, a giant decrease of new listings every single month for the past 8 months in a row. Also, according to the California Association of Realtors, the share of reduced price listings was 32.7%. This has been more or less coming down ever since the summer months last year, but we're still at very high levels, historically speaking here. And here's another way to look at this, because here's altosresearch.com. So on a national level, according to them, the share of price drops is at 31%. In California, the share is at 26.18% for the 7 days ended March 10th this year. Also at 26%, this is well below the peak, which is right here at approximately 43%. On top of that, at 26%, this is actually the lowest levels going back to right here, June 10th last year. Now, even though the share of price drops here in California has been decreasing ever since more or less December last year, at 26%, this is well above the past couple of years, but more or less on par with pre-COVID levels. So at 26% right now, this is well above last year's levels at about 13%. Back in 2021, this time, the share of price drops is only about 14% compared to 26% right now. Back in March of 2020, the share of price drops was 22%. Then in 2019, it was 27%. So the current levels we have right now for price reductions is more or less on par with 2019. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And of course, appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.